Disney stock getting slammed Wednesday evening after reporting disappointing fiscal Q4 earnings. The media giant missing Wall Street estimates across the board. In the last quarter, Disney reporting adjusted earnings of 37 cents per share on revenue of $18.53 billion. Disney Plus adding just 2.1 million subscribers, bringing the global total to 118 million subscribers. I'm joined by Variety Intelligence Platform Chief Media Analyst Andrew Wallenstein, who's here to help us make sense of Disney's latest quarter. All right, Andy, so obviously the big story this evening is Disney Plus and its disappointing subscriber growth figures that we got. Now, we did get a warning back in September from CEO Bob Chapek saying that we will see a slowdown in subscriber growth, but it seems like a lot more people were expecting a little more at least. So what were your thoughts here on the numbers that we got in terms of subscriber growth?
Well, as you mentioned, a disappointment, but Disney was smart to telegraph, a month ago that this was going to happen. So it was not a big shock. And it was not a big shock that Disney had plenty of things to say that would encourage optimism in Disney Plus growth in the future, talking about an increase in content spending that would happen at the local and regional level. Certainly that's been the Netflix game plan, and it's worked out well for them. Of course, in another day or so, we're going to see Disney come out with a Disney Plus day where there'll be all sorts of programming announcements. So they know they've got to get the market excited again. And I think once Q4 22 rolls around and they say that there'll be a better cadence of quality programming coming around, I think, the worst will be over and Disney Plus will be looking a little better in the market's eyes.
So Andy, management was doing a lot here to quell investor concerns, saying that the long-term projections in terms of subscriber growth have not changed. Chapek saying that they still expect between 230 million and 260 million subscribers by 2024. Do you think that the stock price action that we got here in the after hours is saying investors don't believe that?
I don't know if I would go that far, but certainly had we seen a revision of those long-term numbers, oh my God, that would have been possibly the worst thing Disney could have done. So I don't think there was any chance of that. I'm a little skeptical they're going to be able to reach, 260 million given the slowdown. I think the biggest question right now is this quarter an aberration, an outlier, or is this going to be the beginning of prolonged decline in growth rate across a number of quarters? That perhaps the gangbuster numbers that we saw in the first year for Disney Plus showed a pull forward effect that is simply not going to happen again. I fear that Disney Plus is never going to get on that same growth curve. They've set quite a first year example for themselves that I don't think they'll ever measure up to, and the market's going to need to come around on that.
So streaming is certainly important to the growth story, but the core business is also very, very important. The theme parks, of course, which generate free cash flow for Disney, they saw even more of an improvement from last quarter. What did you make of the theme parks rebound as well as, the studios going forward?
Well, I think both are a big deal, particularly theme parks. And you've been writing about this all year. The return of the theme park business for Disney can't be understated. Certainly not out of the woods yet, while all indicators are it looks like the globe is turning the corner on COVID. We've seen recently Disney's run into some issues. So there's still a lot more upside there. The studios are interesting because you couldn't have asked for a better quarter in terms of the films that Disney did. When you look at the performance of Shang-Chi, Free Guy, Black Widow, hitting on all cylinders. However, costs are pretty high in terms of how much to make and market these movies. So it doesn't exactly move the needle in the biggest way. I think there's also some question marks in terms of what the release strategy is going to be for movies going forward, where Bob Chapek was clearly indicating they're going to be flexible. They're going to go probably on a title by title basis in terms of what works, whether it's day and date, a 45-day wait. That's really all they can do.
So a pretty big buzzword in the space right now is metaverse. And we were, sort of anticipating that Chapek might say, but he actually did mention that on the conference call. There wasn't a lot of clarity on what he meant by that. But what do you think could be in the works if there was perhaps a Disney metaverse? Is that something that people should be excited about right now, or is that too far down the line?
I think it's way far down the line, but Mark Zuckerberg has made it that metaverse is sort of the buzzword du jour. We're seeing lots of CEOs of all kinds mention it. The truth is, Disney really does have to figure out a metaverse strategy here. The power of their IP is pretty incredible. They've actually had a sort of a precursor to the metaverse in a gaming property they had, I want to say about 6-7 years back, called Disney Infinity, that involved mixing up all sorts of Disney IP in interesting ways. So this has probably been something that's been on their radar for a while. I think it's going to blend well with theme parks as well. So very early days. I think it'll be a matter of years, if not a decade, before we see Disney really put a strategy behind the metaverse. But you knew they were going to mention it. And I think eventually it will be material.
I mean, this quarter wasn't the best, but hopefully this is the worst of it and things do improve from here. Variety Intelligence Platform Chief Media Analyst Andrew Wallenstein, thank you so much for discussing Disney's latest quarter with me. And if you want more in-depth analysis on Disney and the rest of the media sector, head over to variety.com/VIP.